Hello man, and welcome back to the new video. Today we are going to analyze Eli Lilly and Company with the stock ticker LLY because I was requested to do so by one of my viewers, okay? Now as always we are going to analyze this company using little Canva presentation that I prepared right now here. So let's begin, okay? First of all, why should you listen to me? My name is Yasha and I am your best investment advisor who will help you make smart decisions with investments. Now this is me right now here, and additionally I know quite a few strategies that might help you outperform the SP 500, and I wrote a full PDF guide about that, so click the first link if you are interested in that. Now let's begin. So this is going to be a very simple, straightforward and beginner friendly analysis, so don't worry bro, I will not fill you with any bullshit whatsoever. Just follow through and make some notes and you are going to be fine. Now, as a beginner, you should generally care about the following 6 things. You should care about chart, profit, debt, money on the bank account, value, and price. Now, first of all, Lilly, here we have some facts. It's a pharmaceutical company that was founded in 1876, so basically in this year. I don't know if I said it correctly. It's very famous in America probably, because in Europe I have never heard about it. Now let's begin with the chart, and for chart we have a little instruction that tells us chart has to grow for all 10 years. Now what exactly does that mean? That means that I will first of all draw a little exponential growth line, kinda like this, and then we are going to compare the stock price chart, which is this orange one, with that exponential line. And preferably the stock price chart should follow that exponential growth line, because that means that the company is growing through the years, which is what we want to see. And right now here you exactly see that the graph matches perfectly with that line, so we are good to go. Now we come to the profit, and for profit we also have here a little instruction that tells us profit has to be in plus and it has to grow. Now you can immediately see that in 2017 they had a loss during the whole year, so this is immediately, bro, immediately a no-go. We don't want to invest in companies that have minus in the last 10 years, because we want to have companies that have sustainable business, that are making profit, that are growing, that are expanding the business, that are good buys, you know what I mean? So this is what we want. And here, bro, you can also see that the income is actually decreasing for the last few years. So this is another bad sign why we don't want to give profit a green light, okay? Now we come to the debt, and for debt we again have a little instruction that the debt has to be low, and additionally, preferably it would decrease through the years. Now what do we have here? Here we have quite the opposite, because debt is actually growing through the all years, which is another bad sign that we don't want to see, okay? We want to see company as debt-free as possible, because they have just additional costs with debt, you know, so that's bad, bro, that's bad, you know that. Every debt is bad, almost everyone, by the way. Okay, now we come to the money, and for the money, we mean money on their bank account, and preferably they would have more money than costs. Now, how do we know that they have more money than costs? Use your brain, bro. Let's take a look at the money on their literal bank account, which is almost minus $4 billion. You can see here little minus. That means, bro, that they have less money than the costs. So if anything unexpected happens whatsoever, they cannot cover those unexpected costs, because they have fucking minus bank account money. So they would have to take additional debt, which would increase the debt here even more, okay? So money is disappointing for a company that is as big as Eli Lilly. And now we come to the value, and in terms of the value, we want to invest in stocks that are undervalued. Now we measure overvaluation or undervaluation with two little terms, okay? We measure it by so-called P/E ratio and by intrinsic value. Now as a complete beginner, those might be some complicated expressions, but as a rule of thumb, bro, you should know that P/E should always be lower than 15, and intrinsic value should be higher than the current stock price. Now, first of all, you can find both of those numbers, so P/E and intrinsic value. You can find them on the Google. Just write Eli Lilly Company P/E and intrinsic value and you find it, okay? Now P2E for this company is right now 133, which is way higher than 15 what we want to see. So in terms of the P2E, Eli Lilly is way overvalued. And now we come to the intrinsic value, and here I want to have your full attention because this is a very important concept, okay? Now intrinsic value actually tells you the price that the company should have at this exact moment based on the fair valuation. You know what I mean? So there are some complicated calculations in the background using numbers from income statement, balance sheet, and cash flow statement. And based on all of the financial numbers that this company has, the fair price of this stock should be $328. So this should be the price that this company should have at this exact moment. But the current price is for 600 euros approximately higher than it should have been, you know. It's right now around $900, which is way too much, bro. It's way too overvalued. So in terms of the price, I mean, in terms of the intrinsic value, the stock is overvalued as well because the current price is higher than the price that the company should have at this exact moment. I know that I'm repeating myself quite often, but I really want you to understand this concept. Now we come to the price, and for price, it has to be lower than 150 euros or dollars or British pounds, whatever you are based in, wherever you are based in, I don't know. For me, I'm from Europe, so we use euros here. Now the current price is $905 plus or minus, so it's 105.38, which is way higher than 150 euros. So we don't like the price either because we don't want to invest in stocks that are too expensive, that are overpriced. This is a way no-go, okay? And now, bro, we come to the final evaluation where we are just going to summarize everything that we've found out so far, okay? Now, in terms of the chart is really good because it grows exponentially just as we want to see, okay? If you don't believe me, go a few minutes into the past and you will see how it is, okay? Now, in terms of the profit, they have minus in 2017, I believe, so profit is immediately no-go. Now, in terms of the debt is also growing, so that's a very bad thing to see. In terms of the money on the bank account, they have minus almost $4 billion, which is a no-go for sure. In terms of the value, they are overvalued with P/E ratio and intrinsic value, so that's a no-go as well. And the stock price is around $900, which is way much than 150 that we want to see, because preferably we want to invest in stocks that are below 115 because that's a perfect border between too expensive stock and like normal price stock, you know what I mean? Now we come to the final decision, bro, and in my opinion you should not buy this stock because you can see that the chart is growing. That's a good thing. The company is growing, it's increasing their revenues, but they had loss. They had literally minus profit in 2017, which is immediately a no-go. Their debt is growing. They have minus $4 billion on the bank account, so this is another no-go. They are overvalued with P/E and with intrinsic value, and their stock price is way too high. This stock is way too expensive. Just for that fact, I wouldn't invest in this company because it's way too expensive. And then it's also overpriced. They have minus in bank account, they have minus in the profit, so no-go, bro. That's, for me, it's a no-go, and I wouldn't recommend you to buy this stock either. Now, if you want to, yet again, find out some secret strategies for outperforming the SP500, click the first link and download my full PDF guide. Now, if you want to also know more about stock market, click subscribe, join me on this amazing journey. Do the hard work, bro, and see you on top of the world.